yes, you've broken this. What I would probably then do, I wouldn't be a buyer here because I never like to buy into resistance. But what I would probably do is I'd expect a pullback to this line, which is also this high pivot, and then I'd be a buyer there. Now, and there's kind of this hope that they're going to take a pause for a few months and see whether or not the economy is supportive of further rate hikes. And that's kind of why we've rallied off the lows, at least in the S&P 500 over the last month or so, and with this hope that we do see this kind of pause. But what's interesting is today, we saw the markets open up. The S&P was opening sharply higher, and then some JOLTS data, which is some jobs data, came out, I believe, job openings. And the dollar started to rip because it was a strong number. And again, you could see this market kind of flipping back and forth between what's the Fed going to do? What are the likelihoods of a pause versus not a pause? So it's going to be really amazing to see tomorrow. I do think if I had to guess, I'm favoring a pause, not so much because of the U.S. economic data, but because we've seen other foreign countries get very close to catastrophic issues. Like we know the UK pound was collapsing and the Bank of England had to jump in. Then we saw a couple Fridays ago, the Bank of Japan had to jump in to support their currency. And so my fear would be that if the Fed continues to hike, eventually they're going to break other countries. And I think that's a concern for the Fed.
Hello everyone and welcome to the Daily Crypto. We are back with another video and are joined by the professional trader and analyst, Gareth Soloway. He will be sharing some very high probability trade setups and his trading plans, so make sure to watch the full video if you want to make some money during these difficult times. But before we can continue with the video, let's take a look at the Fear and Greed Index for today. As of recording this video, it is sitting at 38, up significantly from yesterday's 30. This is because Bitcoin made a big move to the upside, gaining investor confidence. Currently, Bitcoin and Ethereum are trading for $21,300 and $1,637 respectively. With that out of the way, let's continue with the rest of the video. Since the Fed has increased rates by another 75 basis points, it has started to affect the markets already. We saw S&P 500 open higher in a very long time, but it was short-lived as the jobs data that came out indicated that unemployment was rising. Because of this, it immediately tanked lower. Even the UN has expressed concern over the Fed's rate hike policy, and we are seeing central banks stepping in to support their local currencies. By continuing to increase rates at a rapid pace, Gareth says they are risking the entire global economy.
I gotta believe the Fed knows this, but we know that it takes a certain amount of months for every rate hike to be reflected in the economy. And so considering we've done 375s already and tomorrow would be 4, how many of those have actually filtered into the economy? And is the Fed starting to get nervous that they might overdo it and then cause kind of a bigger recession or worse? And I think that's, at least for me, that's my big concern, is how much front loading have they done? And then if they keep doing it, at some point, things do break down. I mean, we all know this from history with Fed and the Fed and everything.
It takes a few months for the economy to absorb the effects from rate hikes, and we haven't even fully felt the effects from the previous 3 increments. Yet the Fed has increased rates by another 75 basis points. Gareth is worried and points out that the Fed will start to panic and they might overdo it, causing a severe recession.
Everyone's like, oh, bear market, it sucks. Well, yeah, if you're like a long-term investor, it's bad. And that's where I think we are. We're going to be in this kind of sideways Brazil type market where Brazil had this crazy move up from 2002 to 2008. And then since then, it hasn't made a new all-time high since 2008. So I don't know if it'll be 14 years before the US does, but I bet it's close to 10. And I think, again, you're going to see this sideways move. But going back to what I was saying is that within bear markets, the best opportunities arise. I mean, think back to Bitcoin when it was at 3,500 in the last bear market, then it ran to 69,000. And you can see these type of moves. So again, everyone should just be aware long-term investing may need to take a pause. I feel like they've had their day in the sun, right? Ever since the Fed was printing money, you could have just gone long and been happy. But now it's time for us swing traders to really emerge.
People often complain that bear markets are bad. However, the real opportunities always arise in market conditions like these. Just look at how Bitcoin dropped to $3,500 in the previous bear market and then rallied all the way up till $69,000. However, if we compare current market scenario to the Brazilian stock market, it looks very familiar. Note how the Brazilian stock market hasn't made new highs in over 14 years, and Gareth expects something similar with at least a 10-year period before we see new all-time highs.
One of the interesting things about the S&P chart here on the spiders is that we've had a pretty decent rally and we're kind of just up into this resistance now, right? So it's interesting because we're right into this level coming into the Fed. So you're either going to get a breakout where the SPY then goes up to this longer trend line that stretches down from the all-time highs, or the Fed's going to disappoint the market and then we're going to see this crazy drop back down where eventually I think we're going to this area over here, which was that pre-COVID February 2020 high. So it's really kind of showcasing, and I love how charts do this. They bring you to this point and then it kind of coincides with this epic economic data or Fed decision or earnings announcement. And it's like, okay, well, it's either going to be a blast off or a crap out. And I'm leaning towards a little bit more upside, but at the same time, I got to respect the fact that we are into some resistance here on the charts.
The S&P 500 chart shows that it is testing a major resistance level, and if we get some kind of good news from the Fed, it will continue to rally to the upside and test the upper trend line which Gareth showed. However, if it gets rejected and breaks down, we will see it continue to drop down till the COVID lows.
It's really a remarkable chart, and the similarities with the run in the NASDAQ 100 or the S&P is crazy, right? So look at this run here and look at how vertical it was. And then if we go to like the spiders chart, or let's just do the SPX chart here, look at the vertical nature since 2009 of this run, right? So it's very eerily similar. And then if you look at what happened is, I mean, there were some great rallies. I mean, look at the drop and then the pop, and then, but again, look at what this market has done. Now, you know, like a lot of technicians out there, I'm keeping actually a really close eye on this chart, because if it ever breaks out, you could have a really nice bull run out of Brazil here. It hasn't yet, so you got to respect that. It's still in this kind of wedge pattern. But that is something that I'm keeping an eye on as a potential place to park some money, obviously, you know, within the proper allocations. But if it did break out and the US is kind of in this new bear market for longer periods, that could be a kind of a cool idea there for the charts.
The resemblance between the NASDAQ and the Brazilian stock market is uncanny. We are just coming down from the highs and still have a long way to go if we were to see something similar. Gareth also points out that the Brazilian stock market is moving in a wedge, and as soon as it breaks out, we could see a massive move to the upside, which is why he is ready to put some money in when it happens.
So we have a channel on Bitcoin. If you connect these highs, well, number one, the lows connect right out, then the highs, and it's this beautiful kind of bearish channel. And I think what's interesting about a bearish channel is that if we did rally to 25, guess what's going to happen? And you guys know this, like everyone's going to get bullish, but you're still within the channel, which is a bearish channel inside the last move down. And so it's almost ironic in that way of it has to sucker in enough people before you can get that next dump. So again, I'm not sure if it'll go to 25, but we are making what I would consider a small micro bull flag here, or in spirit of bull flag, which at least does favor some upside, maybe to 22.5, which would be first resistance here, and maybe upwards of that 25 level. But I'm still in the camp personally that I still don't think we've reached bottom. Being through the tech bubble back in, 99, 2000, 2001, and the similarities with the dot-coms, it's just, crypto is just too, it would be too weird it's not enough of a flush out to get to finish out crypto yet to put in a bottom, in my opinion.
Gareth believes Bitcoin could go to $25,000, but it is extremely unlikely that it goes beyond that. The markets like to confuse investors and will trick them into becoming bullish once again, only for it to come back down. According to Gareth, we haven't seen a bottom yet because that would require a major flush out to the point that people start fearing that crypto will be dead.
Bitcoin breaks above my 25K. Yeah. So, I mean, that's the big question is like, at what pivot point do you start to say, okay, this is the beginning of a new bull run? And again, for me, looking at the chart, that bearish pattern would get broken there around 25. But the problem is that just above that, you have this like huge area of sideways action, which is around 28.5. So it's hard for me, I guess to suffice it to say, like the way I play it, the way I'm a trader is, and this is more on the trading side, but let's say we break up here and we go there. So now you have resistance being hit. So yes, you've broken this. What I would probably then do, I wouldn't be a buyer here because I never like to buy into resistance. But what I would probably do is I'd expect a pullback to this line, which is also this high pivot, and then I'd be a buyer there. Now, again, whether or not I go like long, I'm not really a long-term trader, but at least that you could make a case for being a good support for another pop, maybe a move to the upside. But you're right in the fact that like every good trader looks at both sides, right? You can think that this is the side that's going to win or that you're going to be right on, but you also have to look at the other side and think, okay, well, where do I change my thesis? Where does my thesis fail?
Even if Bitcoin breaks above 25K, Gareth says it will not be sustainable because there is a lot of resistance at the 28K mark. However, he says that if it does break above 25,000, he will look for some sort of a retest before he can enter a long position because it is never a good idea to buy at resistance. Thank you for watching this video. Make sure to hit the like button and subscribe to our channel so you can stay up to date with the latest market news and events to stay on top and keep making those sweet gains. See you guys in the next one.